Asian shares crept higher on Wednesday as the prospect of fresh Sino-US trade talks drew a guarded welcome, while the euro hit lows on a range of counterparts amid speculation the European Central Bank was near to easing policy. Japan's Nikkei added 0.3%, while Australian stocks were up 0.7% after hitting 12-year highs. The MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.1%, and Chinese blue chips climbed 0.8%. Stocks in Hong Kong and China climbed on fresh optimism about US-China trade talks and waivers to allow some American companies to buy Huawei products. The Shanghai Composite Index rose 0.8% to 2,923.28 after surging by as much as 1.3% in the morning. The Hang Seng Index paired earlier gains of as much as 1.1% to close 0.2% higher at 28,524.04. Technology shares drove the advance after the US government said it will handle requests by American tech companies for waivers over the Huawei technology's blacklisting within weeks. US Commerce Secretary Wilbur Ross said in an interview with Bloomberg Television on Tuesday that the administration will deal with the more than 50 waiver applications from 35 companies, quote-unquote, within the next few weeks. European stocks closed slightly higher Wednesday as market participants digested a fresh round of corporate earnings and disappointing economic data out of France and Germany. The Pan-European Stock 600 closed provisionally up almost 0.1%, with auto stocks leading the gains with a near 1.5% rise. Meanwhile, Deutsche Bank reported a weaker than expected net loss of 3.15 billion euros for the second quarter of 2019 due to substantial strategic transformation charges of 3.4 billion euros. Deutsche Bank shares were down nearly 2%. On the data front, PMI data showed that a recession in Germany's manufacturing sector worsened in July, with goods producer performance falling to its lowest level in 7 years. French business growth also slowed unexpectedly. The euro slumped to two-month lows to $1.1127 following the data. On the Wall Street, the Nasdaq Composite rose to an all-time high as earnings from Texas Instruments lifted chipmaker stocks and helped shake off regulatory concerns facing big tech. Monetary policy is also in focus for traders amid expectations that the European Central Bank and the Federal Reserve could soon cut interest rates. The ECB, which has a meeting today, is seen cutting rates in September, with the US Central Bank expected to lower rates by 25 basis points at the end of the month. The prospect of a wave of policy stimulus appeared to soften the impact from the IMF's latest downgrade to its global growth forecasts. The global economy is expected to expand by 3.2% in 2019, the fund said earlier this week. That's 0.1% lower than its previous forecast. In commodities, Brent slipped back to $63 yesterday and makes shallow recovery attempts on Thursday. The Energy Information Administration on Wednesday reported that U.S. crude supplies fell by 10.8 million barrels for the week ended July the 19th. That was more than double the 4.4 million barrel decline expected by market participants. Crude oil output declined by 700,000 barrels per day, but this was due to disruptions in the Mexican Gulf, so the distorted data failed to inspire traders. The additional pressure on prices came from the reports that Saudi Arabia and Kuwait are going to resume oil production in the neutral zone. In the short term, Brent will likely remain vulnerable to further losses as fears about oversupply persist. Technically, the futures need to stay above the $63 handle in order to make fresh, bullish attempts. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.